Lately it feels like the economic news is just coming at us constantly, doesn't it? A real roller coaster ride with these dramatic market swings.
It really is. It's enough to make anyone wonder, what moves to make, if any at all.
Yeah, exactly. And that perfectly sets up the big question we're really digging into today.
Which is,
Have you missed the boat on gold and silver?
yes. That's definitely the question I think a lot of people are asking right now, especially if you're keeping an eye on investment trends or, retirement planning.
Right.
So our goal today is really to unpack that. We're drawing on some pretty interesting analysis,
Okay.
specifically an article by Doug Young from April 22nd, 2025. It's called Gold and Silver Soaring. Have you missed the boat?
Got it.
And we want to figure out basically, is this recent surge something you've missed, like a fleeting moment, or is there still potential there based on what the analysis suggests?
Okay, let's get into it then. The article, it starts off pretty strong, highlighting this record-breaking demand for both gold and silver.
It does.
What were the real, engines behind that? Why such a huge increase?
Well, what's really interesting is pinpointing the initial trigger. The article directly points to Russia's attack on Ukraine,
Okay.
and then the dollar-based sanctions that the Biden administration imposed right after.
Like response.
Exactly. And that event, it sort of served as this stark reminder,
Right.
about the vulnerabilities of holding all your reserves in just one dominant currency.
Makes sense.
It prompted this wider reassessment of risk. We're talking central banks, hedge funds, even individual consumers. It wasn't just the sanctions themselves, but maybe a bit of an erosion of trust for some in the existing financial setup.
Right. Okay. So Russia's move then was pretty strategic. Reduce their reliance on the dollar, load up on gold reserves.
Precisely. From their perspective, it's about building a buffer, right,
Yeah.
against those kinds of financial pressures.
Yeah, insulating themselves.
And that move by Russia, it wasn't isolated. It had this sort of cascade effect.
Yeah.
Other central banks, hedge funds, like I said, even regular consumers globally, they started paying attention. And they began, increasing their own allocations to gold and silver.
So it wasn't just one country, it's spread.
Exactly. This really widespread reaction, this kind of collective shift, that's what fueled what the article calls the unprecedented demand.
Wow. So a huge geopolitical event, really acting as a major catalyst. Now, here's where it gets maybe even more complex.
Yeah.
The article also talks about the current administration's preference for a weaker dollar. How does that fit into the gold and silver picture?
Yeah, that's another key layer. If you connect that preference to the broader economic climate, well, a desire for a weaker dollar often pops up under certain conditions.
Like what?
The article points to things like slowing GDP growth, maybe rising unemployment figures, people
Yeah.
getting a bit more cautious with their spending.
Okay, signs of a slowdown.
Right. And those are the kinds of conditions that can lead experts, analysts, to anticipate maybe needing lower interest rates
Yeah.
or looser monetary policies.
Tools to stimulate the economy.
Exactly. And historically, those tools tend to put downward pressure on the dollar's value.
And the link there is pretty clear, isn't it? Usually, a weaker dollar means gold priced in dollars becomes cheaper for buyers using other currencies.
Precisely. More affordable, therefore more appealing. That inverse correlation, dollar down, gold up, that's been a fairly consistent pattern over time.
So you've got the geopolitical shock and this potential policy direction both pushing demand.
Exactly. The perceived preference for a weaker dollar, combined with that economic backdrop, it acted as another significant tailwind pushing gold and silver prices up.
Okay, now what about the analysts mentioned in the article? It sounds like they were almost playing catch-up with how fast gold was moving.
That's a really crucial point the article makes, yeah. It really highlights how analysts were, struggling to keep their predictions aligned with what was actually happening.
How so?
Well, think about it. At the end of the previous year, a big prediction was maybe gold would finally break $3,000 an ounce.
Which was a big milestone itself.
A huge milestone. But it didn't just nudge past it. It surged way beyond it, and with remarkable speed.
Yeah, the article mentions this quick succession of revised targets, right? Like first $3,100, then $3,200, even $3,300.
Uh-huh. And the point was, these new targets were being blown past almost as soon as they were announced.
Wow. That really shows some serious momentum. But I mean, isn't there a risk there when things move that fast? You start thinking about bubbles, right? What could potentially slow this down or reverse it?
That's a very fair question. And look, no market just goes straight up forever, right? Things like unexpectedly strong economic data that boosts the dollar, or maybe central banks shifting back towards tightening policy.
Or even just tensions easing globally.
Exactly. A significant de-escalation of geopolitical risks could definitely take some steam out of the rally. But the analysis in the article suggests that underlying drivers, those core concerns pushing demand, they seem likely to stick around, at least for the near term.
Okay. What about current projections now? Where do analysts see gold heading by year end?
Well, this is where it gets even more interesting. The article mentions projections like $3,600, $3,700, $3,800.
Still climbing.
Yeah, and some analysts are even talking about $4,000 or possibly $4,200. The piece really conveys this sense of almost awe among experts at just how strong this surge has been.
It is pretty staggering. Now, the article also makes a point of distinguishing gold from silver. It says silver's potential for a similar rally is, quote, yet to be fully realized. Why the difference there? What's holding silver back, maybe?
That's a really interesting point about the different dynamics between the two metals. Gold is, primarily seen as an investment asset. Central banks hold it as a store of value.
Wait, the monetary aspect.
Yeah. Silver, on the other hand, while it has that safe haven appeal too, a huge chunk of its demand comes from industry.
Yeah, practical uses.
Right. Think electronics, solar panels, medical stuff. So silver's price can be much more tied to things like global manufacturing output or, technological shifts.
So it's got that extra layer affecting its price.
Exactly. Those industrial demand factors might not be perfectly mirroring the immediate economic and geopolitical anxieties that have been driving gold so hard. So yeah, it has its own set of market forces at play alongside the investment demand.
Okay, that makes sense. So when we pull all this together, the article's main takeaway seems pretty optimistic, doesn't it? Despite these soaring prices, they argue there are still significant investment opportunities in both gold and silver.
That's the core thesis, yes.
What's driving that optimism? Why do they think the window hasn't closed?
It really hinges on this ongoing global trend. Nations, institutions, they're looking to diversify away from being so heavily reliant on the U.S. dollar.
Okay, that de-dollarization theme we hear about.
Exactly. As more players look for other ways to store value, other ways to reduce their dollar exposure, the basic fundamental demand for precious metals is expected to stay strong.
So sustained demand is key.
Sustained demand, combined with the factors we already talked about, the record prices suggesting momentum, the potential for the dollar to keep weakening. Those are the main reasons they think there could still be room for appreciation.
So they're framing gold and silver less as just a quick trade and more as important assets for investors seeking stability and a hedge, right, against economic uncertainty.
Precisely. It taps right into that classic idea of them being a financial safe harbor, especially when things feel stormy.
And when we say safe haven appeal, we're talking about how historically they tend to hold their value or even go up when other things are shaky, like during recessions or big political crises.
That's exactly it. In those turbulent times, precious metals have often acted as reliable stores of value. They offer some insulation against, say, purchasing power erosion from inflation or currency devaluation.
Right.
The article really emphasizes that this enduring allure, as they put it, of gold and silver really comes to the fore when uncertainty is high.
Okay. So let's just quickly recap then. We've looked at how these big geopolitical events sparked record demand.
The initial trigger.
Then how a potentially weaker dollar is adding fuel to the fire.
Right, a reinforcing factor.
We've seen gold prices climb dramatically, even surprising the experts.
Yeah, outpacing predictions significantly.
And while silver's path is a bit different due to its industrial side, the overall fundamental drivers for precious metals seem pretty solid right now, according to this analysis.
That sums it up nicely. It's this combination of things. Record demand from geopolitical shifts and central bank buying, the support from a potentially weaker dollar, those big upward revisions in gold forecasts. It all points towards continued strength, potentially.
And the silver angle adds another layer.
Right. That latent potential for silver to maybe play catch-up adds another dimension for investors to think about.
Which really brings us back to you, the listener. As you've heard us talk through all this, the economic uncertainty, the historical role of gold and silver, what does it make you think about your own financial situation? Your own tolerance for risk?
Yeah, it's about reflecting personally, isn't it? Given these global shifts, the move away from the dollar, the traditional safe haven appeal, what implications might this have for how you view these assets?
Absolutely. It's definitely food for thought as you navigate these, well, Pretty interesting and definitely evolving economic times. We're not giving advice here, of course,
No, absolutely not. Just exploring the analysis.
but it's certainly something worth considering for yourself.